Opening hook, imagine a small ripple in a pond. Now picture that ripple spreading across the entire ocean. This is how Japan's low interest rates shape global markets. But how exactly does this happen? How can a slight change in Japan's interest rates have a significant impact worldwide? Today, we will explore this fascinating financial phenomenon and uncover the hidden forces that are at play. Introduction to Japan's influence. On global markets, Japan may be an enigma to many when it comes to its economy, but its impact on global finance is profound. With interest rates that have been near zero for decades, Japan has created a unique financial environment that not only affects its own economy, but also resonates far beyond its borders. Even the smallest adjustments in these rates can have outsized effects on global markets. This is not just about numbers on a screen, it's about the delicate balance of economic power and the interconnectedness of our financial world. The magic trick of macroeconomics. Imagine watching a skilled magician perform a trick. They distract you with one hand, while the other hand sets up the illusion. Similarly, macroeconomic shifts can often feel like a sleight of hand, complex, and often unnoticed until the impact is revealed. Japan's economic strategies, particularly the carry trade, function much like these tricks. Investors take advantage of Japan's ultra-low interest rates by borrowing money at these rates and investing it in higher-yielding assets abroad. It may seem like easy money, but what happens when the trick doesn't go as planned? Japan's stock market drop and its global implications. Recently, the Japanese stock market experienced a significant drop, with a plummet of 12.4%. While this may appear to be a localized issue, the reality is that this drop had ripple effects throughout global markets. Investors around the world were suddenly confronted with a stark reminder of how interconnected our economies are. The fear and uncertainty that followed highlighted how quickly market sentiment can change, driven by events in a single country. This is not solely about Japan. It speaks to the fragility of global confidence. Understanding the carry trade. Let's dive deeper into the carry trade, a financial strategy that may sound complex, but is actually quite straightforward. Investors capitalize on Japan's low borrowing costs by borrowing in yen and investing in assets in other countries that offer higher returns. This strategy relies on the assumption that interest rates in Japan will stay low, enabling consistent profits. However, this dependence on low rates also comes with risks. If Japan's rates were to rise, even by a small margin, the profitability of these trades could vanish, leading to a sudden and severe unwinding of positions that could shock global markets. In conclusion, Japan's low interest rates have far-reaching implications for global markets. The interconnectedness of our financial world means that even the smallest shifts can create significant disturbances. Understanding the carry trade and its risks is crucial in comprehending the impact Japan's interest rates can have on our global economy. As we navigate the intricate waters of finance, it becomes clear that Japan's influence extends well beyond its own borders, shaping and molding the intricate tapestry of global markets. Background music playing. Narrator. Hidden risks lurking beneath the surface. Narrator. In the world of finance, one of the most concerning aspects is the hidden risks associated with the carry trade. What is particularly alarming is how little we truly know about its scale. The vast amounts of money involved in these trades are not always transparent, making it difficult to assess the full extent of the risk. It's like a ticking time bomb within the global economy, one that could go off with little warning if conditions change. This hidden financial risk is a stark reminder of how vulnerable our financial systems can be when built on precarious foundations. Narrator. The wealthy's cautious approach. Narrator. Now let's take a look at the behavior of the wealthy individuals. More and more, we're seeing the richest among us holding onto cash rather than investing it. This cautious approach is often a response to the uncertainty in the market, signaling that storm clouds may be gathering on the horizon. When those with the most resources start pulling back, it serves as a barometer for the overall health of the economy. It indicates that a more conservative approach may be wise as we navigate these uncertain waters. Narrator. Japan's economic history. Lessons learned. Narrator. To understand the significance of Japan's low interest rates, we need to delve into its economic history. Japan, once an economic powerhouse, faced a prolonged period of deflation and stagnation. In response, the country kept interest rates at rock-bottom levels. While this strategy helped create the environment we see today, it also led to unintended consequences such as speculative bubbles and increased global financial interdependence. The lessons from Japan's past are essential for understanding the potential risks we face now. Narrator looking ahead. The threat of a global recession. Narrator. As we gaze into the future, the possibility of a global recession looms large. Economic indicators are flashing, warning signs, slowing growth, market volatility, and increasing uncertainty. While it's impossible to predict what will happen exactly, one thing is clear: what happens in Japan can't be ignored. The interconnectedness of global markets means that any changes in one part of the world can have profound impacts elsewhere. Investors must stay vigilant, adaptable, and informed as they navigate the complexities of today's financial landscape. Narrator, the importance of staying informed. Narrator. In the end, the story of Japan's low interest rates speaks to the global interconnectedness of our world. It serves as a reminder that even the smallest changes in one part of the world can have profound impacts elsewhere. As we move forward, understanding these dynamics and staying informed will be key to making sound financial decisions. The more we comprehend the forces at play, the better equipped we'll be to navigate the challenges and seize the opportunities that lie ahead. Narrator, stay informed, stay connected, and embrace the future of finance. Background music fades out,